Hello and welcome to the channel. Welcome to the TMP group. My name is Tom. Today's Wednesday. It's February 9th, 2022. Super happy you stopped in today. On your way in, if you would click the like button, that'll help get this video out to more people, help with the YouTube algorithm. If you're new to the channel and you like what you hear, hit subscribe. You'll hear more from us. We try to come in on a daily basis, a couple times a day, Monday through Friday, and then hit you once or twice over the weekend. And feel free to share this video with your friends, with your family, especially this one. I think this one is real important. I've had a lot of people, not even in the past while, but it just comes up all the time. And they ask me, they say, Tom, what is your strategy for investing? What's your methodology? How do you obtain the successes that you've obtained? How do you sleep at night when the markets are red and turbulent markets? And how do you stay positive and optimistic about the returns, and how do you get the returns that you get? And I'm going to share with you just some simple methodology about my beliefs and my strategy and my just my philosophy, I guess, when it comes to trading. I do have some rules when it comes to trading. I talk about this with the private members of the TMP group, and hopefully the majority they subscribe to this methodology or this philosophy, and it does work. It works over time because we're long-term holders and we are investors. We're not gamblers. So before I get into this, I do have to remind you that this video is for entertainment and educational purposes only. I'm not a financial planner. I have had many years of success in the stock market. I plan on continuing to have many years and building generational wealth, and hopefully that's what you're here for too. But do your own homework, do your own due diligence. Take the opinions that you see online, whether it's YouTube or TikTok, Instagram, Twitter, Reddit, StockTwits, wherever it is. Take it with a grain of salt. Do your own homework, do your own due diligence, and become convicted in your own trades and your own investments. All right, so let's jump right in. What I always tell people when they have market anxiety is I ask them questions about the philosophy that I subscribe to. And I say, can you rest easy at night where the market is right now? Now, depending on where the market is, if we're in a bull run, of course, they say yes. If we're in a bear market, their answer is no. So I want to try to show you what rules or philosophy that I have that I found over many years that helps me sleep well at night. And I really want to put my portfolio and portfolios at a sleep easy level. So what rules, what philosophy do we have for successful investing and building a successful portfolio? And guys, a successful portfolio is a portfolio that grows over time for sure. It's not always a portfolio that is going to moon. It will see its ups and downs, so don't get discouraged, especially if you're a beginner. If you're an experienced trader, then you know exactly what I'm talking about. Okay, so let's jump right into it. First of all, I want to talk about mindset. We have to have the mindset of an investor. We have to have the mindset of a successful investor, a successful trader, whatever it is we're doing. When I take a look at a stock, I look at a stock and I look at the company. I don't buy stock, I buy companies. I invest in companies, I don't invest in stocks. The way I invest in these companies is through their stock offerings. So my mindset is I want to own the company and be an owner in the company. When you purchase a stock, you're purchasing a percentage of that company. Along with that percentage of ownership comes the responsibility to share the risk and to share the reward. So my first mindset that I want to set is that I am owning a company and not just a stock. All right, what next? When I invest in a business, I invest in businesses that I understand. And again, these are just my opinions. Take them for what they're worth. But I want to be invested in companies that I can easily explain, companies that I'm familiar with, companies whose products I use, companies whose services I use, companies that I have an awareness over, because I'll understand not only the stock, I'll understand the company, but I'll also understand the market conditions and how it trades against them or how it moves against them. I always want to have three reasons why, and this is very key. I ask myself, before I buy a stock, and I would write these down and keep a notebook, keep a journal, keep some type of a stock journal when I buy a stock, and that way when I'm looking to get out of it, I take a look and see if these three reasons are still valid. So I want to ask myself, why am I buying this, investing in this, and I want to be able to have 3 reasons why I'm investing in it. Okay? So, for example, if I'm investing in Nike, one reason I might invest in Nike is because I love Michael Jordan, as you can see in the backside and in the background. And Nike Air, the Nike Jordan brand, I believe is not only do I believe, I know it's a global brand, and it will continue to thrive. Number 2 is Nike is worldwide. So not only am I penetrating the U.S. market, but I'm penetrating the U.S. market. And number 3, Nike has cut out the middleman. Not completely, but they've allowed the retailer to go direct to Nike, so they have increased their profit margins. So those would be 3 reasons I'd write down if I was buying into Nike or investing into Nike today. And then I want to invest with logic and not emotion. Now, it's real easy to get caught up in hype, especially when stocks, the news is out there, there's a short squeeze here, or this stock is about to moon, and to get invested in the hype. For me, personally, I'm not interested in that. I will do my homework, my research, my due diligence on the company and see if it's a good buy, but I'm not going to buy on hype. I'm going to buy on logic, and I will invest in logic over the long term. So, mindset, number 1. We got to make sure we have the mindset of a millionaire investor. Whether you're investing right now $10, $10,000, $100,000, or $1 million, have that mindset of a $1 million investor, not where you're at right now, but where you want to be. Okay, next, if you would, because it's not even number 2, it's just the next one in line, is I want to be a prudent investor and have prudence in all of my acquisitions, my investing. So what am I going to do to have prudence? Number 1 is I am going to avoid margin at all costs. It's real easy when you open up an account. You put $5,000 in there. They give you 50% of what you own, so $7,500. Or if you put $50,000 in, now you have $75,000 to trade. Well, that extra 50% on top of your account, that's not your money. It is your money to use, but that money comes at a cost. When I open up my portfolio, I never ever want to see a margin call. And ladies and gentlemen, I have received margin calls in the past, and I've worked hard to get out of margin. And now that I'm out of margin, I am more diligent and prudent with my money. So number 1, when it comes to prudence, is no margin spending for myself. All right, number 2 is I do not ever want to over leverage myself, meaning I don't want to ever have any more in the market than I can afford to hold into the market and that I can afford to risk. Do stocks have the risk of going down to 0? Absolutely. Do companies have the risk of going bankrupt? Absolutely. Now, if we do our homework and we do our due diligence and we're prudent investors, we don't have to worry about that catastrophe happening, but we cannot predict black swan events, and stocks will go down. So I never want to have more in the market than I can afford to hold or risk at that time. So ask yourself, am I risking more than I can afford? Next on the list under prudence is I want to ask myself, am I gambling on this stock or am I investing in this stock? Goes back to doing your homework and your due diligence. We don't ever like to gamble. We like to make sound investments. I'd rather see a steady 30 to 40% increase in my portfolio than gamble on something going up 10 times. Now, do we have moonshots that are out there? Of course we do, but it's a very, very low percentage of our money, and I'll get into that when I talk about asset allocation. But I definitely want to differentiate between gambling and investing. And then what I want to do is I want to think long term. I want to look at the short term, and I enjoy doing that, but I want to think long term. Now, my investing horizon, I am 50 years old, so I figure I've got another 20 years that I want to continue to invest. That'll put me at 70. If you go back, you can take a look at a video where I showed you how in 10 years you can build $1 million portfolio. But I like a 20-year horizon for myself from here because I am going to pass on generational wealth to my children and their children. So look at the timeline, and then what I want you to do is set up a P&L, a profit and loss statement for every single one of your trades. Now, there's a lot of work that goes into this, and a lot of people don't like to do the work. A lot of people just want to go, give me the easy fix and get things done right away. I prefer the work because when you're hands-on and you're writing out a P&L, whether you write it out on an Excel spreadsheet or on a notebook, it shows you how well you followed the mindset rule and how prudent you are. So continue to have a P&L, update your P&L, look at your P&L often, and find out which stocks are making the most out of your hard-earned money and which ones are costing you money. Because we all have weeds in the garden. We all have weeds in the farm that we need to pull and put those into money trees and put them into crops that will produce us, produce food for us and produce an income for us over years. All right, let's talk about asset allocation. I want to set a budget. Your budget may be $50 a week. It may be $50 a day. It may be $500 a week or $500 a day. Whatever your budget is, set the budget. Treat that like a bill. Treat it like a bill, treat it like an obligation, and pay that bill. Don't only invest after you spend the rest of your money. Invest your money and then spend the rest of your money would be my advice, my personal advice only, not financial advice. But I believe that it is a good idea to take care of ourselves and take care of our generations prior to taking care of anyone else. And I think you'll find you'll have more than enough if you learn to cut back maybe on a cup of coffee a day or a $20 lunch every day, whatever it is, we can find a way to do it. So I want to set a budget. I want to treat it like a bill. I want to pay it. Then when I assess my asset allocation, I want to take 100% of my money and I want to cut it into a 80-20 percentage, a 70-30 percentage, or a 60-40 percentage, depending on your risk. If you are more risk tolerant, 60-40 is one end. If you're non-risk tolerant, 80-20 would be the far end. Myself personally, somewhere between 80-20 and 70-30. But as the market changes, that shifts. But I try to stick with an 80-20 because I am fairly conservative. But conservative has allowed me to have massive gains, even when on years where the S&P only yields 7 to 8%. So what I want to do is I want to take 80% of my money and I want to put it into what I call my money trees. These are the stocks that I have a firm conviction on. Most of these stocks are blue chip stocks. I have 7 of them right now. I believe that I might even add an 8 and take the Super 7 to the Grade 8. But let me tell you my money trees. My money trees, these are stocks that I can look back on and they've always produced for me through good times and bads. Apple, number 1. Not necessarily the number 1 stock, but just number 1 of my money trees. We have Nvidia. We have Tesla. We have Google. We have Amazon. We have Facebook, and we have Microsoft. Those are my 7 money trees. The next money tree that I'm looking to plant is shares in Berkshire Hathaway. And we'll go with the Berkshire Hathaway B just because of their affordability. But Berkshire, I want to follow Warren Buffett, follow Charlie Munger. I want to invest the way they do, and then I want to compare my percentages to their percentages. So Berkshire B will be our 8th money tree that we plant in 2022. Now, in 2021, we had the Super 7. In 2020, we had the Super 7. So this will be the first time in 3 years or 2.5 years that we've added to the Super 7, and that will become the Grade 8. And once that happens, I'll let you guys know. Exciting for me, maybe not exciting for you, but Berkshire Hathaway, take a look at it. So 80% of my money is going to go into these high conviction stocks, the money trees, and then 20% of my money will go into high conviction, higher risk stocks. For example, I have a high conviction in Lucid Motors, but it's high risk. I have a high conviction in DraftKings, but it's high risk. I have a high conviction in SoFi, but it's a high risk. I have a high conviction in NEO. I have a high conviction in ChargePoint. These, I will only allocate 20% of my funds to these stocks because I want to nurture my money trees. And anything that falls outside of my money trees or my high conviction, high risk, I would call them my crops. Those are weeds. We do get them in the garden every once in a while. It's hard to get rid of them. But go through your stock portfolio, pull the weeds every once in a while, and put that money where it's going to work best for you over time. Okay, now I also want to stay balanced. So I do want you to look at your portfolio, and regardless of what price your portfolio is, if it's $1 million portfolio or a $100 portfolio, imagine it as a $100,000 portfolio for a minute. And I have 10 stocks in that portfolio. I want each position to be weighted at $10,000 as my starting point. Now, as certain stocks outperform others, that 10,000 will go to 13,000 and another 10,000 may go to 8. Then I'm going to rebalance. So I like to keep a balanced portfolio. I like to have a cash position equivalent in all the same of my stocks, so I'm not too far overweight, but I also don't want to be underweight. And it will allow me to continue to trade and continue to invest even if I don't have dry powder, extra money on the sidelines. So make sure that the portfolio is balanced. You're not overweight, you're not underweight. Don't put all your eggs in one basket. Diversification will help you over the long term. Something else that helps over the long term in asset allocation is dollar cost averaging versus going all in on a stock. For example, I love Facebook where it's at right now. Instead of putting $10,000 into Facebook, I choose to put $500 a week for the next 20 weeks into Facebook for a new $10,000 position. I will catch the high highs, I'll catch the low lows, but over the course of 20 weeks, I'll have another $10,000 in Facebook. So when we dollar cost average, we mitigate our risk. Now, some people ask me, well, Tom, now is a great time to buy. Believe me, the market will always give us great times to buy. There's volatility. The best time to buy is when the market is red, when your stock is down 20, 30%. And we see a lot of the fan faves down that much. Your portfolios may be down that much. Now is the time to buy. So always have liquid funds available to buy the sales. If I'm DCAing into Facebook and I see Facebook at a serious discount, then I might double or triple my buy. Instead of $500 for that week, I might go $2,000 for the week. But over the course of time, dollar cost averaging in, having available funds on the side to buy the severe dips, to buy the severe sales, the red tag sales as I call them, is also a good idea. Now, if you're going to day trade, if you're going to swing trade, if you're going to trade options, I would also recommend that you use multiple portfolios. I've got a couple of links down below, and I've got 4 of them actually, one to crypto.com, one to Coinbase, another one to Webull, and to Robinhood. All 4 of those are very user-friendly, have mobile apps, and they're user-friendly. The interfaces are pretty easy. If you're a beginner, if you're experienced, my recommendation is TD Ameritrade, and that's where my main accounts are. But I do have trading accounts in both Webull and Robinhood because I do not want to mix my funds. I don't want to open up my portfolio and because I've lost on a trade, a swing trade or an option play, I don't want to see my investment account decline because of that. Now on the flip side, because we have both winners and losers. In fact, if you're following me, you know that we had a huge winner on NVIDIA. In fact, real quick story, we were $20 away from hitting our strike price on our sell price on NVIDIA, would have given us a $1,900 per contract. We missed it. We rode it for another 3 days, sold out of it today for a plus $2,500 per contract times 3, $7,500. So those NVIDIA calls paid off. But that's in a separate account. I want to keep those funds separate. That is my quote unquote gambling money. That's my investing money. That's or trading money. That's the money that I use to generate money so I can buy more of my high conviction stocks and I can grow that 6-figure portfolio to a 7-figure portfolio. So I would recommend a second account or third account. Same thing goes for crypto. Take 80% of your money, put in your strong conviction plays in crypto. For me, that's Ethereum and Bitcoin only. The other 20% goes into some of the altcoins. All right, ladies and gentlemen, we're almost at 20 minutes here. Sure appreciate you hanging in. Hopefully this has helped. I do want to leave you with this. No matter what your investing level, have a plan. Analyze your plan. Go back over your plan and stick to your plan. It's your plan. It's your business. Treat your brokerage account like you would treat your own business because that's what it is. Don't treat it as a game. Don't treat it as a way to place a bet. If you want that, go to DraftKings. But treat it as a business. And patience pays. The market tends to pay patience. Zoom out on the stocks that you have in question. See how they performed over the past 5 to 10 years. Past performance does not guarantee future performance, but it gives you an idea of what the company is able to do. For example, I covered 3 stocks earlier in today's earlier video that I think are in line for a stock split because they have performed so well over the past 20 years. What else? Let's see. Warren Buffett said it best. He said to be greedy when others are fearful, but be fearful when others are greedy. So the time to buy is when others are running away from the stock, in my opinion. And make sure, even if there's blood in the street, sometimes it's your own blood, that you are buying and you are averaging down. Averaging down has helped me so much. I've done a video on averaging down. You can go back and take a look at that one as well. But it allows you, if you bought into Apple at the high, at the 180s, and then it got back down to 150. If I buy in at 165, then my average is going to be at 165. It'll bring my average. It'll cut my average basically in half. And those numbers may be off. I'm just using a generalization. Hopefully you guys understand that. Okay, and do not always follow the crowd. Herd mentality in the stock market is often wrong. If you line up 20 positions where the herd was going long on the stock and the other 10 they were going short, 70% on each side, if you followed the opposite, would have made you a ton of money. So I like to stay away from the crowds. Set up rules for running your business, and that's what it is. Manage your portfolio and stick to it. Be committed to generational wealth. Build a portfolio where it doesn't matter where the market is. Market can be up, market can be down. Over time, we will prosper. Our portfolios go up and to the right, especially on days like today, February 9th, Wednesday, 2022, where all 4 of the indices are up. And I hope we continue with this bull run that we're having. We know that 2022 can be a volatile year with what the Fed is doing, with inflation, with the rate hikes, with the unrest in the Ukraine and Russia, with the Omicron COVID variant. There's a lot out there. Put your money in places where you can sleep well at night. Put your portfolio at a peaceful sleeping level. I wish you the best, and I do hope to see you on the next video.